At Numerian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you. Today, July 20th, 2023, why Carvana stock is up 1,000% in 2023? Carvana's turnaround story has been driven by a three-step plan. Carvana packed on even more gains after reporting its second quarter earnings. The online used car retailer announced that it would reduce its debt load by more than $1.2 billion. Carvana stock is down more than 10% today. Shares of Carvana, NYSE, CVNA, stock have accelerated higher by about 1,000% this year, surprising investors across the board. At the beginning of the year, Carvana stock traded for less than $5 per share. Today, those shares are worth about $50. The online used car retailer recently reported its second quarter earnings ahead of schedule, which it called its best quarter in company history. Quarterly revenue tallied in at $2.97 billion, beating the analyst estimate for $2.59 billion by an impressive 14.7% but falling by roughly 24% year over year. Carvana's loss per share of 55 cents also came ahead of the analyst estimate for a loss per share of $1.15. While still unprofitable, profitability did improve, as total gross profit per unit was $6,520, up by 94% year over year. Why Carvana stock is up 1,000% in 2023? Along with earnings, Carvana also announced a massive debt reduction of over $1.2 billion. The debt agreement made in collaboration with a group of note holders that represent over 90% of the total principal amount of existing senior unsecured notes, will see the company eliminate more than 83% of Carvana's 2025 and 2027 unsecured note maturities. The agreement will also lower Carvana's cash interest expense by more than $430 million per year for the next 2 years. So, how has Carvana turned itself around to gains of 1,000% this year? The company previously laid out a plan with 3 key steps. The first step was to achieve positive adjusted EBITDA. During second quarter, the company reported adjusted EBITDA of $155 million, up from an adjusted EBITDA loss of $216 million last year and a loss of $24 million last quarter. Step 2 was to achieve material positive unit economics. Positive unit economics involves analyzing and improving the revenue and cost of goods sold per unit. Carvana's total retail units sold during the second quarter was $76,530, down by 35% year over year. However, as highlighted earlier, total gross profit per unit was a record high $6,520. Finally, Step 3 involves a return to growth after completing Steps 1 and 2. In a letter to shareholders, CEO Ernie Garcia and CFO Mark Jenkins explained that Step 1 was completed during second quarter. The pair stated that Carvana's goal is to now complete Step 2 before eventually moving on to the growth phase. Thanks for watching. Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.